Alright, can you guys hear me in YouTube land? A little Hector. Thank you guys. Again, for the quality, I don't know why it like sets, it looks all blurry. If you set it at, you can go in there in the little gear wheel and put it to 720 and it looks normal. Alright, I'll be back in a minute after this disclaimer stuff.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit by losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment in most Apple's Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without termination. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account will likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading report can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in preparation of hypothetical performance results at all, of which can adversely affect actual trading results.
This trade room and its webinars are not intended to mirror my trades or to give specific trade recommendations. Analysis of I share trades and trades and I take to myself based on my personal analysis. With all the firms to teach trades, I identify specific areas of trades and mention themselves with ultimately decision jurors. Trading is extremely risky, and for you to decide on my personal trades, you need to sort your own risk and potentially lose your entire account and more. I'm not always profitable and have 15 drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values and how we did exact prices for my trades. You can see when I enter zone pricing to the master spreadsheet as well as prices of trades whether you want to go long or short. You have the ability to copy the spreadsheet and enter your own values and use mine to confirm zone prices and to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade, as it has extra prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alright, good morning everybody. NASDAQ is whipping around here. I think there's another Fed Circus Act talking right now, but start out the day with a nice little error here. So there was some bias that came in that turned out to be a broken ice, one of my 6 SI Stop Iceberg setups. I played a bark and lick here. Bookmap Bob didn't announce it, so the zone drawing tool announces if it qualifies as a long or short. We use the ATR to determine that. It didn't announce it, but it looked like it touched it when I zoomed in. Where the error happened is, you got to keep an eye on this entry point. So this entry is outside of an ATR, 115% of an ATR, right? So you need to be adjusting it until you get filled. So I was, preoccupied with another chart, and I had my order at 2020 or 20,020, and I needed to move it down, and I didn't get over there in time, and I got filled on both bark and lick because there's liquidity down here, and rips up and stops me out. So I should have never had the trade on. So that was a nice little error to start the morning. So that's that. That's why you have to stay on top of your entry, because it changes dynamically with the ATR. So as the ATR changes, you can see a 30 ATR is pretty good. This thing is really whipping around, which is a good thing, but it's not a good thing when you forget to change your price and get filled and get stopped out. All right, so there's a stop run here. I would consider this an IZZY trade, so an inflection zone. So these are my inflection zones that I draw based on important things that happen on bar charts and structure. So the 4 important areas of inflection zones are tops and bottoms of balance areas, high volume nodes of balance areas, buying and selling tails. So you see all these tails up here, those were buying tails. Here's a selling tail, really important because that's instant rejection, and then directional conviction. So when you get directional conviction, I draw those zones as well, and gaps are also directional conviction. So like for instance, this gap down from this to this overnight, a couple days ago, that's directional conviction as well. I use a regular trading hours bar chart. Anyway, the market opened up came down here, bounced off where these tails were yesterday, and it's back. It's right at the top of this Izzy zone. I would take a Izzy short here if this turned out to be a bearish event. So you see these stop runs here. Actually, it's not. It's a bullish event. So there's different trades I can take here based on literally just the volume event. So what I usually, most of my trades are looking for volume events in my important areas, right? And that's where these trading strategies that I have and give to my room come from, right? So these are, and we'll go over these as they happen. There's your Izzy right there. So most of these are volume events at my important areas. There is a trade that solely trades off the volume event because the volume event in itself is an edge, extreme edge, right? So the bark, blind ATR retest confirm, and the lick, which is the bark that I'm just using liquidity above or below as my target. I used to trade these, and I did trade these for a month. This was a couple years ago now. I wanted to show my trade room that these inherently are the edge in the market, right? So I went 1 month, it was December, I think of 21, where I traded every single trade, bark, we called it BARF back then, blind ATR retest failure, every single one that I saw, regardless of direction, regardless of where we were on the chart, and it was profitable for the month. I made like 15 grand trading like 2 lots, I think it was. But the point is, these inherently are the edge. Now, when you can apply these events at important areas, I have my important areas, you may have yours, that's fine. What I'm telling you is you will do much better as a trader if you wait for these kind of events to trigger your trades. So anyway, I can take a potential bark and a lick if there's liquidity up here, and I'm sure there is. Let's take a peek. There you go. So you can hear Fed guys talking too. So here's another thing we talk about all the time. I've been getting burned on them lately, especially with Powell talking. You know, when these guys are talking, it's a free-for-all, right? Any keyword out of their mouth could change the scenario and you know what's going on in the market. So yes, these are, like I just got done saying, they're the strongest edge I've ever seen in trading, futures trading, in my 25 years of trading. But a keyword out of their mouth, and I don't care what's going on here, something can change. It's just like trading into a number, right? So you have to make the decision for yourself if you're willing to trade while these guys are talking. Usually it's the good cop, bad cop. So these minor Fed dudes are always like pumping the market up. So they'll, like for instance, this would not surprise me one bit if they pulled one of these, right? So we do the usual bungee jump that happens every single time in these equity markets, right? Say we like rip up here, they come out, they say something bullish, we get like 5 more in the next couple days as usual, and it rips up here, and then Powell comes out and then says what's really happening, right? And then all it does, it gets killed, but then it just goes back to where it was. Versus if they didn't pump it up, Powell comes out and says what's really happening, then we're down here. See what's happening? They play the same game over and over and over and over. So wouldn't surprise me to see this rip up. Just a guess, doesn't mean it's going to. And even any thesis I do have, those are just guesses. I come up with ideas, well, what I think's happening, bigger picture, but I still trade these volume events accordingly, right? So if I think this market looks very bullish, I'll still take shorts based on what's happening in real time. If I think it looks really bullish and I get long setups, then I'll trade those, you know, at least double size. So we'll go over those scenarios. But in the meantime, the bark and lick trade, I need this as my filter. This is algo guy, we call it. This is an exponential moving average. Actually, I'll post this. I remembered to bring this up. I'll post this in the YouTube. If you guys want to learn about it, very, very powerful indicator that a lot of these algos trade off of, right? So a lot of times they trade when this thing crosses, right? So you can see this thing crossed, market rips off the page. And then there's other algos that trade when the market moves into the longer term exponential moving average and they fade it, so on and so forth. So I will post this in the room. And if you guys have questions, just throw them in the YouTube, because that's all I'm really looking at here. Hector says, Scott, the lines in red and yellow seems like sigmas of VWAP. Is that correct? Which lines? You're talking about the zones? Or are you talking about these lines here? So I'm colorblind too, so this is the yellow. So this is a stop run. So there's different colors for these different SI events, right? So yellow are buy stops, red are sell stops, blue is buy ice, black is sell ice. So we'll see these as the webinar goes on. But these other lines, and you get this with the zone drawing tool. Let me actually post this too, so we'll go over this webinar as well. So this is the first thing on here. This is zone drawing tool. So we'll draw the SI events. We had to, up until very recently, we had to draw these by hand. And if you watch any of my webinars in the past, I'd have to draw them by hand, which is they were not fun to do 500 times a day. So anyway, that's the document there. You can get the zone drawing tool at the Bookmap Marketplace, and here's a couple YouTube videos on how to use it. We're using the Pro. If you get the basic right now, you get the Pro Beta, and the Pro Beta has these reversion trades. That's what these lines are here, right? So these markets have a ridiculous propensity to come back to the volume event. So we actually have a trade. It's more of a scalp trade where we play for the move back to the volume event. So this dotted line here is the 1 ATR. This is the stop for the 1 ATR. Here's the 2 ATR. Here's the stop for the 2 ATR. And the 3 ATR is up here. And there's the stop for the 3 ATR. So, I always get questions, well, which one do you take? Do you take the 1, the 2, the 3? I don't know. Some days the 1s work nonstop. Some days it's the 2s that work, right? And then you can take the 1s coming back. Some days the 1s and 2s get blown out and the 3 works. So the point is, just like any strategy that you're trading, any edge that you're trading, you need to take as many as possible, right? So if you're going to trade the 1, you take every single one that you see, because you don't know which ones are going to work. It's called probabilities. That's what trading is. So if you have an edge, and this is an edge, trust me, because I've watched about 15 million of these things, you take every one, and you don't say, I'm not taking that one doesn't feel right. That's what losing traders do. If you haven't, and we actually have this now running at a trading firm. A trading firm has backed this strategy. So I will have stats here in the next few months on each market, like what's the best ATR. So say NASDAQ, the sweet spot's the 2 ATR, S&P the 1 ATR. And I actually posted this in my room not too long ago. Let's see if I can find this quickly. That was a while ago, but let's take a peek. So this is my Discord trade room. And I do the same thing I'm doing in here every day. The Bookmap webinar is a little more basic because there's always newer traders. If any of you guys know where I posted that in my trade room that are listening, where I posted the trading firm that we're with, the statement, there's got to be an easy way to find it. I just can't remember. If you guys can post that, I would appreciate it, so I don't have to sit here and scroll for 5 minutes trying to find it. I'm going to rely on my room and post that, and I'll show you guys the stats for June. It was ridiculous, right? And we don't even have it working full. Like, it's not perfect yet, right? So it made 12 grand. I think it might have been 10 to 12 grand in the month of June, just trading 1 lots. So trust me, the strategy works. So we have 2 different ways you can trade here. You can trade I just got stopped out of I was long wheat as well. We'll go over that loser. So guys, this is what trading is, right? So you have your edge, and you just keep putting it on, right? Until, for that particular day, we were just talking about this yesterday, you should have between a 5 and a 6% of your account size stop loss. So if you hit that for the day, you should be done trading. Other than that, you just keep putting on the trade if you know you have an edge, and that leads right to the trading in the zone document we show every week. This is directly out of Trading in the Zone, right? An edge is nothing more than an indication of a higher probability of one thing happening over another. There is a random distribution, meaning you don't know which ones are going to work. You keep putting them on if you have an edge. That's the great thing about what I am doing, that I'm teaching you guys, is you don't have to wonder if this is an edge. This is the best edge I've ever seen in my trading career, and I've traded millions and millions and millions of contracts. I was a multi-million-dollar trader just watching order flow, so I know order flow like the back of my hand and how the markets react, so on and so forth. So I'm telling you, you can figure it out yourself. You can watch these for a month and you'll see exactly what I'm telling you, that this is the best edge you can trade. So the point is, most traders are always searching for an edge. They never really know. They see something work for a couple days and then they say, oh, I'm going to start trading that, and then it stops working, and then they're on to the next edge, quote unquote edge, right? This I've been doing for 7+ years. I got back in the business. I got knocked out of trading because I didn't have an edge. And then when Bookmap came around, I got back in. I was going to trade stocks just off the heat map stuff. And then Bruce from Bookmap kept telling me about this SI indicator. And this is the CME MBO data that is this enhanced data that shows the stops and icebergs. And the minute I saw this, I'm like, all right, I'm going back to futures because this is the best thing I've ever seen. And here we are 7 years later, and it's still the best thing I've ever seen. So my point is, you don't have to worry if you have an edge. Now that you have the edge, you need to learn how to trade it and then monitor yourself, right? So anyway, I've taken 2 losers right off the bat. The first one was an error. I shouldn't have been short this NASDAQ. I just failed to move my entry point here. And then I took one in wheat. So does that mean I just give up and say I'm not trading this edge anymore? It doesn't work? No, I just know that this was not even the trade I should have put on. So I have 1 loser today, big deal, on to the next trade. Once you can get that mindset and control your risk and know the days that it's not working, you just need to close up shop and wait for the next day, which has been a lot of days lately because it's been very difficult trade lately, especially yesterday was a complete shit show, pardon my language. You know, when you get trade like this, it's not going to be a fun trade. that was ridiculous, right? Just would not go. We were short into the close, but I was short into the close, I should say, but it was brutal. So anyway, yeah, that's my rant for that. So this still has not retested this zone, right? So if this goes, it's just a complete chop fest again. But anyway, if we go here, 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 I can take bark and lick longs as long as out. All right, I'm missing other markets too. Let me head over there real quick. Hold on here. Get this all stuff on. This is the hero. We'll keep an eye on that. This is the real-time options activity. Well, shocking that the Mag 7's on its highs, and the S&P's on its highs too. The S&P 500 index. All right, so we'll go over that stuff too. Here's your internals. Not seeing much here. It's bouncing between the plus 500 and negative 500 for the NYSE. The NASDAQ about the same. ADD is at 1,000. Advanced decline, showing the universe of stocks, how many are advancing or declining for the day. What you want to watch for if you get extremes. So if you get over 2,000 plus, I try my best not to short in those instances. If you get minus 2,000, I try my best not to go long because it's just you're fighting. Let me turn this down a little bit. You're just fighting the overall market. So we'll go over that if necessary. It's not really important right now. Here's the 1 ATR. Well, surprise, surprise. Being sarcastic. 1 ATR. Your stop was up here. Never stop. Back to the zone. You're out. That's the trade. So we have 2 different types of trades we're doing in my room. The ATR, the position trading, which I just showed you guys. These are looking for bigger moves off of those volume events. Then we have a trade. That's this part of the spreadsheet that you can get as part of my room. You can get it. We'll go over this. You can get it independently too if you can't get in the room. And then this is the trade. That's more of a scalp where you're just playing the move back to the zone. Speaking of which, someone posted it. So this was the. So I blacked out or put the lock on so you can't see because I don't, they don't want other information, obviously, their account number and everything else. This is the trading firm though, so you can see here. I posted this so people can see, and I'll continue to post this. This month it hasn't been running. It's been off more than half the month because we're just trying to get it right. My developer, Johan's been working with their developer. But anyway, you can see all these different products and the win-loss stuff. And then this was I thought I put the final on here, no? I must not have put the end of this thing in here. Oh yeah, there it is. So I made 10,400 for June, trading 1 lots. That's pretty good, right? So it's a quick trade. A lot of traders naturally want to scalp, right? Because they hate sitting in trades. You got to condition yourself over time to sit in trades. I hated sitting in trades too. That's why I was a scalper at the beginning of my career. This is the best scalp that you can possibly take, in my opinion, in these markets is trading back to the zone. So, but it's very quick, right? You got to be in and out. If you're watching multiple markets, it's nonstop. So the point is that's why we automated it, which is awesome. So now it just runs because I know it's an incredible edge, and it's proving already that it is an incredible edge, and it's not even 100% yet. But anyway, we have two types of trades for you guys. All right, let's see what else is going on here. Any questions? Throw them in YouTube, please. All right, so this zone, if you guys in my room are wondering what this zone is, this was running all night. So when I restarted it this morning, it picked up this zone. So that was not anything from, early this morning. It was overnight, this stop run, sell stop run. This just happened. You got buy ice and gold here. So step one is to identify the volume event. Step two is to see where we're at in the bigger picture for my important areas. So you can see this is back in the zone, looks like 2468.7 down to 68.4. It might be just above this zone. Let's see. Yeah, so this is not an IZZY. This event's happening up here. I always say, these are areas. These are not exact prices, but I mean, this is up here. So I'm not going to take an IZZY there, inflection zone. If it was down in this, I would take a potential long IZZY. So nothing going on there. Let's see which way algo guy is moving. So this is a bearish algo guy, right? Blue, shorter term exponential moving average is below the red. And this is sometimes a sign in its own right when the market tries to pull above. You can see it tried it here too, and it can't, and it gets back below. You get the algos that jump on and continue it lower. So the same thing may be happening here. This is an event in the red, so I could potentially take a red rum trade. It's just one of my strategies, but I need to see ATR retest. Confirm, and this may have already done it. It did, of course. So guys, right here, there's another one ATR. It's just non-stop. So here's your one ATR, back to the zone. This is 10% of an ATR in front of the zone. That I consider that a retest of the zone. Doesn't have to touch the zone exactly, as long as it's 10% of an ATR. Touch that, I should already actually be short here. Bark, lick, and a red rum. And you see down here, the odds of this getting filled are about 100%. Not saying right this second, it could rip 200 points before it comes back down here, 200 ticks before it comes down here, but the odds of this getting filled are very good. And what is this? This is just liquidity. It's someone with their orders resting in the market. Most traders would see this and be like, oh, I want to go long, man. Look at this big liquidity down there. I mean, again, it's only 100 lot, but relatively that's a lot, right? But most traders are like, oh, I want to go long. Someone really wants to buy. It's the exact opposite. Somebody really wants to get filled. And how do you know that? The longer it's in here, right? There's liquidity in and out all day long. But the longer it's in here and the heavier it is, the more they want to get filled. Because if something came out bearish for gold, this thing's ripping right through there. Well, they don't care because they want to get filled, right? So you can use this as your targets, and that's what the lick trade is. I wait for that, and then this is my ultimate target for that particular trading strategy. So anyway, this already happened. I should have been short there. If it comes back, I will go short. A lot of traders say, well, if you could have been short there, why don't you get in here? It's better price. Because for me, I feel like I might have got away with something if it does one of these. So if it comes back, if I see it late, is what I'm saying. If it comes back, then I'll put it on. So you can see the price. This tells you everything you need to know too. So this is the spreadsheet I showed you on the heat map. And that's the Scott Zones add-on I showed you already. That's this guy, right? Scott Zones drawing tool. So it tells me, so you can see here, it announces when the market, right there, GC short validated, 719 my time, that was 919, that was right there. So that's the blue ATR line. So once it touched the ATR, it validated, tells me this is a short setup, right? So this announces as well. It's awesome. So if you're not on this, on a certain product, you can hear it and you're like, okay, I got to go short. So anyway, if this comes back, I'm going short. Bark, blind ATR retest confirm, lick. This is my ultimate target for that. And let's see if we got anything in the market profile stuff. We do not. Would not merge that day. And nothing at the lug. So just bark and lick shorts is all that's on the table here. And with my risk, so I'm risking, these are these Apex accounts. We'll talk about that in a little bit. 5,000, I'm risking 10% per trade. That's a huge risk. Remember, we just talked about for the day you should be risking more than 6%. So your normal trades, like if you're trading your own accounts, your own money that you're living on, so on and so forth, should not be risking more than 2% on each trade, or you will blow out your account eventually. It's 100%. So anyway, this tells me with this risk level, I can put on 0.8 of a regular contract or 8 micros. You just times it times 10 to put on the micro. And even if it said I could put on one full one, I wouldn't put on one full one. I'd put on 10 micros. Why? Because if I just put on one, it's all or nothing, right? If I put on 10, if we hit important areas as the market moves in my favor, I can get out of 3. I can get out of 3. I can get out of 4, right? So I'd rather trade micro than that, than one big contract. So that comes back, I'm going to go short 8 micros at 2465.3. And then if I fill on that, my stop's all the way up here. And I can hear the groans in the crowd right now. Oh my God, you're right. When I trade gold, I like to risk 20 ticks to make 40. That's imposing your will on the market. The market doesn't care you want to only lose 20 ticks. What the market cares about are these ATRs. So if I'm going to be wrong on this trade, I demand the market push back the full ATR plus some, get through the volume event, and push another ATR plus some. That's when I say I'm wrong on to the next trade. And that's how you avoid the best you can this nonsense that will very likely happen when I get filled, if I get filled on this trade. You see all the liquidity in here. That's algos. You see them pulling and putting in orders. That's what happens. This type of trade happens 90% of the time when nothing's going on. So if I fill on this, and I better hurry up and get this in because it's about to fill, that's where my stop goes. And it's just from trial and error. That's barking. 53. We got the natural gas number coming out here too in a second. 1 second, I'm trying to find the 16. So I got individual Apex accounts set up to these strategies. All right, those are working. Actually, it's now. See, here's a perfect example. I had it at 53. Now it's 52, so I got to move it down. This cost me a trade earlier because I didn't move it in NASDAQ. Thank you. All right, that's now there. So it's resting. It comes back. I will go short. I guess we'll watch that. There's nothing going on here. If this comes back, I will go long. Bark and lick NASDAQ. We'll come back there. It's not anywhere near that. I just wanted to see what was going on here. It's always funny to watch all the liquidity pull out of the book because they don't want to get run over on the number. This is my whole point about trading into numbers or trading into Fed talk, right? You're just rolling the dice when the market just doesn't swipe in your face. So you can see the sweeps indicator firing off here. That's part of the Global Plus. So that's part of this. You guys get discounts to the basic trading software, the Bookmap right here. Click on that link, and that gives you discount to the Global Plus. And then here's the MBO. We'll go over all this stuff as the webinar goes on. But let's see if you guys got any questions. It's pretty quiet right now. Actually, speaking of which, let's get some tick strike rolling. Listen to that. Let's see. First, I think I'm going to keep working. What does that mean? Tony's superstar. First time here, and I think I'm going to keep working. Okay, keep working then. Use the search function, top right corner. Good morning, Hector. Da, 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 da. The zone is the inflection point. No, these zones that I draw are called inflection zones, aka we call them IZZIs. You can see they're starting to hammer these stocks, by the way. These are just areas, important areas that the market reacts to. And then what I do is I wait for volume events. This is just one trading strategy. I'll wait for a volume event in that zone, and then I'll fade the move, right? So right now we're basically just bouncing around in this guy. But say the market came down in here, and I got a bullish volume event, I would take the long, right? Oh, I think I forgot to cancel. Yeah, sure did. Hold on. So that was an error. I left an order in the order book one of my strategies did not fill earlier in NASDAQ because I actually moved it down in time, and then that just filled on accident, so I got out of that. So anyway, I did fill all my gold. So I'm short gold. You can see I'm hammering these stocks. This is tick strike. Been using this for about 13 years. You can get discounts to that as well on this document. Right down here. Tick strike. Just click on these links. We'll go over the Ludwig levels, everything else too. That's all on that document that I posted in the YouTube. All right, what's going on here? So again, this guy probably said something, and the market just falls off the page, right? This is why you got, if you're going to trade during this talk, you got to be okay. And you can see all these spot gamma levels here too. So this is a pretty important area for NASDAQ in a lot of ways. This is all just below here. You got the put wall and the call wall. Oh no, I'm sorry, the QQQ put wall, the call wall for the NASDAQ, vol trigger. A lot going on here. I'm going to combine these two. This is the rare Step Bros SI setup. Sell stops with sell ice. You don't see that very often. Inherently, this is a bearish setup, meaning this should do one of these because you have pukes and you have sell ice. If it turns out to be a bullish setup, it's telling you something. Watch out above, right? Like it's that inherent. This inherently is bearish. So I'm going to combine these two zones, and with the zone drawing tool, you can move these things. Maybe. Hold on. Why is this not moving for me? It's not moving. Here we go. Oh, we got something in crude too. I really want to be long crude. Potentially. There we go. All right. So that's working. All right. So that zone, there's the zone. Step 1, 2. Let's see where we're at. My important areas. This is an Izzy zone. So if this turned out to be bullish, I'll take it. I just got done saying that setup is inherently bearish. But this is my inflection zone. This is where this huge move started. This is the high volume node of this guy, meaning where the most trade occurred in a balance area. And you can see that's where it bounced yesterday and gapped up. And here we are again. This is a very important area. This breaks. You can see there is nothing below here. And we know these are important spot gamma levels. If it breaks that, you got the dealers that are going to be jumping on. This could be a whopper move down today, right? Just a guess. I still trade if this turns into a bullish event, I'll take it. What you could take here, if this does break, I'm talking mainly to my room too, because we don't talk about these strategies that much here. All right, everything's firing off here. This is well, it's a failed balance breakout. This is from a long time ago, but if you want to get in an aggressive, meaning you're not waiting for a retest confirm, that is a failed balance breakout. It's a breaking bad as well. Balance breakdown through with a high volume node of prior. So you got a couple trades here. I would probably wait for one more setup a little below here, right? Because this is where this launched from. But any setups below there, I can take a breaking bad, meaning prior balance breakdown through the high volume node of, current balance breakdown. And guys, this is bigger picture stuff. Like when I have these examples on here, it's more like balances that are happening like now, today, or yesterday, right? But you got failed balance breakout, breaking bad. All right, so we got another setup here too. So that this could get real interesting, guys. And you can see this relative volume. Now we know the big money's playing here too. All right, so this validated as a short, first and foremost. You see how it hit the ATR line? So I already know this is a short setup. So minimum, outside of those breaking bad and failed balance breakout, if I take those, I can probably take Bark and Lick here. I just need to find my algo guy now. Make sure that's the case. I'm pretty sure it is. And we may be able to take an algo guy cross trade off of this too. I should already be in it probably. Where is my NQ algo guy? There it is. So you see how this thing flipped short and they jumped on. And it did the thing we talked about earlier too. So this crossed. They tried to punch it above, couldn't do it, back below, gone. All right, so it's not really, this was up here where it crossed, so that is one of my strategies when this crosses. So that's out of there's no trade there. So for this setup, all I really have is a Bark and a Lick. Well, I'll check. Actually, there's a pick trade I could have taken here too. Hold on. I'll Let's see. So I'm waiting for a retest for those strategies. So if it doesn't retest, I'm just not in the trade. The other strategy, I'm almost positive this is a pick trade. Yeah, it was a little higher because I was going to put this on earlier. So so you could see this was already giving you a thesis of what was going on, right? Market opened up, tried to get in this prior market profile composite. So these are just days, value areas of days merged together. Very powerful. Tried to get in, couldn't, got in here. When markets get in these market profile composites, the expectation is it makes it to the other side. This one's already almost to the other side. Yesterday it didn't make it, popped out of here, and now it's back. It's very likely it's going to go in here, and this may be a whopper. And you can see what's going on here too. That means the big money is now playing. ES and NQ. Let's see what the internals look like here. What does that mean? It means that there's program selling, and it's not even happening yet. Like this thing, it's made this kind of move, and this season hasn't even hit minus 1,000 on the tick. You start seeing minus thousands on the tick, it's program selling. These big funds are unloading, liquidating their stocks, right? So that's where you want to. Why that's important is because then you can go for bigger moves, right? So you're not. We know these markets when you're short, you got to be ready to jump out of your shorts at any important area, right? Because it does this every single time. But if the big money's playing, now you got some actual meat behind the selling, if you will. Hey, what do you know? Look at that one. So this one I wouldn't have taken, but it worked, right? Probably why it worked. There's your ATR. There's your retest. Oh, to the exact tick. Now I can go short Barks and Licks 36 quarter. And based on the volatility in the zone, I can just put on two micros. That's it. That's how it is as far as the risk. You've got to respect your risk or you're going to blow out your account. I'm actually going to trade double size here though because I'm bearish now, very bearish. I think this may go to zero today. So that would be fun to watch it move to zero. Fat finger to zero. 36.25, and I've got to keep an eye because this, till I get filled, I've got to keep adjusting this. This already cost me today, right? Right now it's at 36 quarter, the short meaning it says short aggressive, but it already did the ATR retest. But if I were to get in aggressively, I would have got in right there. Aggressively means first move out of the zone. This did the retest. If it confirms, I'm in. 36 quarter, bark and lick. Put that in, and I'm trading double size shorts. I got something in CL too. All right, there you go. There's the pattern. It happens only about 85 times a day. So that's working. I'm not going to take the. Or I just filled. I'm not going to take the breaking away or the next volume event down. I can take those aggressively. So, there you go, guys. This is the same pattern over and over and over and over. So now I'm filled. Where's my stop? All the way up here. And again, I hear the groans. Do you guys? Do you want to impose your will on the market, saying I like to risk 15 points when I put on Nasdaq trades? Go right ahead. You're very likely going to get whipsawed. Such an important area here, by the way. That's my stop. So I'm risking 100 points on this trade. Guess what? With the volatility, I'm expecting at least a 100-point move, probably more if this gets rolling. So I'm fine with that risk. It doesn't matter if I'm fine with the risk or not. It's what's telling me I can put on based on the volatility and when I want to risk on my trade. All right, let's see. Let's see what hero. All right, so that's a perfect scenario. Now we got a new event. Now I can trail my stop. So now I'm not going to be risking 100 points on the trade. And I can actually add to the trade on this new event. We'll get there in a second. So you can see the S&P 1 billion is a lot. It's a 1 billion move in the options and the SPX is a move you want to pay attention to. You can see this just moved. It's already a billion and counting. Mag 7. I mean, look at these stocks getting just smoked. This is just these guys, these options players are not the only game in town, but they are big players, right? So they're unloading, and I think the big money's in there unloading too because of the. I know because of the relative volume. So this could be a whopper. What I'm going to watch for very closely is the blue lug, and you can see these are confluent. You got the bottom of this whopper market profile composite with blue lug. If this hesitates at all down here, I am getting out of the trade for now. There's always another event right around the corner. In the meantime, all right, so here's GC's just being gold right now. So this is what I'm talking about the whipsaw crap. I don't stop out here. I stop out up here. They can play games all they want. If you can get it up there, congratulations, you win. I'm on to my next trade. All right, so what did I just do here? I went short this guy. This was a step rose, by the way. Didn't remember when I said how it's inherently bearish? Well, there you go. Stop was way up here. New event, I can move my stop to there. Now, this is where you get subjectiveness comes in, right? I do not like stopping out in front of zone, just in front of zones or in the zone. So you have to make a decision if you're going to stop out here or if you're willing to risk another 30 points and get it outside this event. I know these markets, this is still a potential support level. I am bearish, I've got double size on. I don't need to let it come back 40 more points. It's either this thing's going to go right now or it's going to do its usual nonsense and rip right back off of the page. So I'm just going to put it right there. If it was in the middle of this zone, yeah, I would move it up. 30 points is a lot. I'm just going to stop out at 66. So I'm basically, I entered here, so I'm only risking like 20 points now if this comes back and stops me out. Let me put that in. And once I get filled, wherever my stop price is, well, I already had it up here, but once this comes in, I put it there and that's where it stays. You could, again, it depends on your view of the market. I just don't want to risk another 30 points because I know what these markets do. But I'm going to be stopping out right in the middle of that. But I'm all right with it. Because, guys, if you get stopped out, there's another trade right around the corner. All right, so that's 36. And 36. All right, that's working. I'm sorry, not 36, 66. 66 quarter. What am I doing? That was almost an error right there. 66 quarter is my stop. Hold on, I gotta get these in. 66 quarter. All right, that's working. So now, I'm watching that blue lug. It's right down here. And this is probably pretty close. I don't need to see an exact blue lug tag either. That was pretty damn close. So I probably would have been out right there. I just know it's 10 points away, 12 points away. I don't need it, and you can see right where this bounced off of. So I just made another error. I should have been out of the straight. Right there. We get another move down here. So when you see relative volume like this, these are the times where this stuff can blow right through these important areas, right? But I just made a mistake because I couldn't get over there. Guys, this is why I have these Apex accounts for these things, because I lose so much money because I'm showing things on the webinars. I would have been out right there. That 10, 12 points to the blue lug is close enough, and market profile composite low, straight move into that low. So that's an error on my part. So now on the flip side, what I could do, so my stop's up here for my short. I should have been out of some right there. I'm hoping I get lucky and it comes back. I'm going to get out. I need it to at least be in the 90s. But say this holds. Well, this is a market profile composite low. I can take that long if this bounces here. So let's see what happens. I'm going to be ready to get out of some of these though if we get one more swipe down here. Come on. The bottom of this guy was what? 80, yeah, right around 90. Just get me in the 90s. There's pretty much no way that's going to happen because when I make mistakes, I always pay dearly for them, but we'll see. So if this holds though, this is the pick trade. Profiles encourage. All right, hold on. This may get one more swipe down there. Come on. Nope. I told you, it's like pulling teeth, man. There's liquidity down here. So actually my lick trade stays on, right? Because that trade was to the liquidity. So I don't care what's here. The blue lug's right here, market profile composites right here. The lick trade is meant to stay in it till you get to the liquidity. So that one I'm going to hold. All right, why is this thing bouncing? These things are getting killed. Let's go. Let me out of this bark trade. Come on. I mean, it's seriously, it's like I can't even turn my head to get out, and the thing just rips back up 20 points. This is what, in this market condition, and it's about to change, by the way, in bigger picture, I believe. But these buyers are just fearless. They just buy every single dip. So that's why I'm so ready to get out of this. I just need another move into this area, and I'm going to get out of my bark, not my lick. It's like there's a force field here or something. No, just can't do it. Just can't do it. All right. All right. So anyway, my stops in. If this pops out of here, though, as long as this doesn't turn into a bearish event, meaning hits the ATR, I'm going to take a pick long. And I just got done saying how bearish I am. What's a pick long? Well, here's one of my important areas. Profile, composite, low. Volume event, I'll take the long, and these are the best ones that move straight into the area. So I will flip out of my shorts and into a long at 66 quarter. Different trading strategies. That's this trading strategy. Pick. Profiles encourage. When we make them comical names, memorable names. This is a book by JFK, if you guys are old enough to know that. That's why I named it, but it's, get it? Market profile, profile encourage. Take any trade that moves in and out of a market profile, composite high or low. That was moving to the composite low. So again, I'm if this makes one more move down, I'm going to try to give it a chance to blow through here, because that is some serious relative volume hitting the market. It's like 3 times normal. S&P is 4 times plus normal. When you see this kind of relative volume, this can lead to whopper moves. So it just can't get down there for me, though. So that's again, I made a mistake. I would have been out of my bark trade down there. So now I'm probably going to get stopped out. All right, I'm going to go long pick at 66 quarter. If it does stop me out, I'm going to flip into one trading strategy long. So annoying. Just so, I tell you, I'm 25 years. I don't think I think I made one mistake a couple weeks ago that worked out. But I mean, I make a mistake and I miss something. It's like, nope, middle finger, you lose. I'm not going to lose. I mean, I'll lose a little bit on this trade, but it's just a mistake. I just missed it because I was showing something else. So that's the way it goes. You got to be quick if you're trading NASDAQ. All right, crude. I am pretty bullish. I was. Let's see what's happening here, though. I haven't done anything in here. I'm just talking about thesis. So this still looks like, if I get a volume event in here, I will gladly take a Izzy long, and I'm going to take a double size. Why? Because this market, something that should have happened, did not happen. So you had a balance. I just stopped out of that NASDAQ trade. I told you. That's so annoying. I just cost myself 70 points because I wasn't on that. I wasn't paying attention down there. Guys, this is my point on these areas. Like, if it's an important area and you're short, you don't need to squeeze out 10 more points. I just wasn't over here, like I said. That's close enough. So, middle finger from NASDAQ. I am now long the pick trade. I'm out of my bark and lick trade. So that's upsetting that I caught that move and didn't get anything out of it. So that is the way it goes. All right, so anyway, crude. I hope my room got out of some down there. This was a failed balance breakout. That is inherently, should have done this. This was also, you see how it hesitated at the high volume node there and then gap down through. So many different reasons why this market should have done that. Instead, it just recovers. So I am thinking that's going to happen. Again, just a thesis. I'll still take shorts, but if I get longs, I'm trading double size. If this violates back down through, then I'm going to change my thesis and I'll trade double size shorts again. But right now, anything bullish in crude, I'm taking double size longs. This was not a bullish event, so you see I'm not long. This is actually a bearish event. There's no Izzy zone here. Let's see what Algo Guy looks like. Algo Guy is bearish, so I can take barks and licks on the short side, and it's crossing. And so this is Algo Guy cross trade right now. It's crossing. What's the other criteria? I need to see 200% more or more relative volume. And you can see right there. That's a lot of volume. back-to-back bars too. So I should have already been short this, I believe. Yeah. So it's coming back right now. I will take that short at 92. I could put on 11. That's the HAL. That's this trading strategy. What am I doing? HAL. Algo get cross with heavy relative volume. Right? Take any trade during or after algo get cross with heavy relative volume, 200%. We're seeing that. I should have already been short this market. All right, so I am long here. I already had almost 30 points in here. This is an area where I get out of some, and of course I missed this exit too, some of them. I mean, this is just getting ridiculous. Honest to God, man. I can't even blink my eye. All right, I'm going to give this a chance to rip through here. This is a prior event. This is a predetermined area that I get out of the trade. Let's see if this can push out of here right now. I want to use Market Pulse here to help me decide too. We'll go over Market Pulse. Let's see what we got going here. All right, if this can't go, I'm getting out of some. I got 4 on. I'm going to get out of 2 of them. I don't know why I had 4 on either. That's double size. I was only supposed to put on 2, so I kind of got lucky on that. Let's see if this... Yeah, I just said it. I got lucky. All right. I'm out of 2 of them. This is a prior event. I could wait here in a second. I want to show other things, and I can't just stare at this thing. But what is this? This is one of my areas that I pay myself when I'm correct. I should have paid myself on the short side. I just couldn't get over there. That was this. All right, now I got a new event. I can trail my stop. We'll go over there in a second. These are my areas. I pay myself as the market makes money available. Straight out of trading in the zone. I put in obviously my areas. This is the area I should have been out of my other trade. Lug, confluent with market profile composite low. Made a huge mistake, cost me 70 points. Now, this is a move back to what? A same day prior SI event. They react ridiculous to these areas, right? This one blew through it. I still have a couple on. I actually made a mistake and put on double size, so I still have full size on. I was only supposed to put on 2. Now what can I do? So guys, do you see, first of all, like that felt like we were going to 0 right there, did it not? Guess what? Not only did I should have been out, I didn't, but not only did I get out of my short, I flipped and went long based on what the most important thing in these futures markets, the SI events, right? So I flipped and went long. My stop was way down here. New event, now I get to move it up to there, which I will do right now. 57.75. So guys, you heard me say, I think these markets are going to 0 today. I'm long. How does that work? Because I don't impose my will on the market. It's just a guess. I don't know what's going to happen. Nobody knows what's going to happen. I do know how the markets react to the volume events. I'm long. Now, I got out of some there. That was like a 30, 40 point trade. Now I trail my stop to that. So if it comes back, I scratch the rest of them. And I'm not scratching just because I like to move my stop up to break even when the market comes back, just so I don't lose money. I'm moving it based on something that happened in the market. And here's a new event. Let's see what we can do here. I might be able to flip back short here for the impending move to 0. Madam Shizzle in my room better be putting the 0 thing up. She always says she has this little zero lady that comes in. Where we at? Zero Mimi, whatever they call those things. I'll show you if she puts it in. Where is... Thank you. Here we go. Yeah, I mean, this is an Izzy trade, guys. I'm not liking this buying tail. That's a tail. That's important. And you look where that bounced right off of. Actually, I could have taken an Izzy long here, too. Missed that trade as well. Right there. So I missed this strategy. I put on the pick. I should have put on Izzy. I just didn't see this. Right? I've made like 6 mistakes today. Right? Just cost myself 50 plus points on that trade. Anyway, this is a move back right into this Izzy. I would take that short if this fails back out of here. So I missed that trade. I'm on fire today. If this fails, I will stop out of my pick long and I will turn around and go short 56.50. I can put on 2. I'm going to put on 4, meaningfully 4 because I'm still bearish this market. I'm long, but I'm bearish, right? So if it comes back, I'm going to go short 56.50 Izzy. I said, I missed an easy long right there. I hope my room's catching these trades because they are, if you're quick, they're layups today. What is he? You got questions, throw them in. I'll get over there in a second. All right, that's working. 56.50. So again, I went long pick. I should have been long Izzy too. I got out of some here. If it comes back, I'm going to stop out of the long and I'm going to flip Izzy short. In the meantime, Algo Guy is actually pulling bullish again. See how quickly this thing flipped? Let's see, what's that was at 750. Can I go long the hell here? Yeah, the relative volume is still kicking. Yeah, I could take the hell long here too if I wanted to. The heavy Algo Guy cross, heavy relative volume. There's your cross. 751-ish volume event, or right after that, right? 753. And what do we have? Heavy relative volume. I got to get on that crude trade too. Right there. So if this rips from here, I'm going to put on how long. Here's an example where I'm not going to enter at this price. Smack dab in the middle of that volume event. I'm willing to move this one up to 67, 8 points, so I don't fill right in the middle of that thing because the odds of that bouncing off of there are very good. So I will take a how long if this moves out of here. So I got different strategies working now, right? This comes back, I'm putting an Izzy short on. This moves out, I'm putting a how long on. If it does this, I could put on Barks and Licks because Algo Guy's bullish. So I've got different scenarios based on how this zone reacts. I'm going to put that hell in. Right, at least we got some trade, guys. Like last couple of webinars, it's been like watching paint dry. You can just hear my rants. So hell is number 120. So you can see here, guys, this is what I'm looking at. Like I have all these strategies, and when it renews, so on and so forth. But all these strategies are tied to these individual accounts, right? And we got a couple of them live. I blew out on one last week on an error, shockingly. But why I'm doing that, if you guys don't know the reasons, right? So let's just go do the Apex thing while we're sitting here. So, you know, for the longest time on these webinars, I was trading my live account, right? Well, you've seen today, I've already made like 6 mistakes, right? One cost me, 60 points in the NASDAQ, another one where I should have got out, another 60 points. So I got sick of losing thousands and thousands of dollars of my living money. All right, I'm not backed by a firm. Well, I am for the reversion trade now, but the point is I'm trading my own money, right? So I can't be taking those kind of losses. I'm not $1 million trader anymore. That's the whole point. I will be again, hopefully soon, especially with the right backing. But when you're trading on your own, anybody knows, I can't be risking thousands of dollars just because I'm on webinars and I'm not able to get over there, or I forget to take orders out of the order book. I did that today too, right? So what I did then, this started last year and a half ago, more than that. That's where because I used to do all this stuff just in my head, and then I would just show stuff on the chart, right? If you watch any of my earlier Bookmap webinars, none of these were, we didn't have labels for any of these. These were in my head, all my trading strategies. But I just be like, oh, here's an area, here's an area. Instead, I made it a lot more uniform, where we have these different trades, and these have to be updated too, by the way, some of these Apex accounts. But and I've assigned an Apex account to each one of these. What's Apex? It is a trader funding platform. Actually, let's do it on my. So if you go to my website, this is all, and it's in that document too, right? Everything's on my website too, guys. If you can't, like if you're watching a replay of this Bookmap, you're probably not gonna be able to get access to that document, like later today or whatever. Just go to my website. Everything's on here. Here's Apex. Click on that. So you can pick one of these. I had the 150s for most of them, and I switched to the 250s because they had a deal, so on and so forth. So that's all this. They're an awesome rotating thing here, right? For any sale they have, put in Pulcini 50, and right now it's 80% off of any of these, right? So you get 80. This is the normal price as it rolls off the screen. It's $297 minus 80%, so that's times 80%, so that's like $60 a month or whatever. So anyway, the whole goal of these things is you want to make the profit goal. This is the big one. I have never done that one. I don't like that one as far as the risk reward. A lot of people do the 50. So like the 50s here, you got to make, yes, it rolls off the screen. You got to make $3,000 before you lose $2,500. That's not the whole story though, right? If you go up at any point, you can be up $2,500. Well, say you're up $2,700, right? And you're $300 away from of getting a live account, getting funded, and you pull back $2,700. Well, you're still. I'm sorry for this writing, by the way. You're still up $300, but you just blew out of the account. So you're still profitable when you blew out the account out because you can't have that trailing threshold. So that's the one negative about it, but it does help you control your risk, learn how to control your risk, so on and so forth. If you are underfunded, if you are practicing, if you're working on new setup, if you come in my room and you don't really know what's going on, don't trade your real money is the best advice I can give you. Get one of these for very cheap. You still have skin in the game, so it's not like you're trading simulation. That's another a lot of traders are like, I can't trade sim because it's not real, and I don't care. For me, I don't care if I'm trading sim, 1 lot, 1,000 lot. It all feels the same to me. It's about being right and wrong. But if you do these, you still have some skin in the game, and it hurts if you lose. I don't care if it's $50. If you got a re-adding $50, it hurts. You don't just open your window and throw $50 out the window, do you? So at least you'll have some respect for these, is what I'm saying. And these are the best way to work on your trading. And then if you do well, if you get blown out, then you lose $50. If you blow out an account, then you just re-up. They have renewal things, they're cheaper, so on and so forth, where you can renew it before that. Otherwise, it's like a monthly fee, right, until you get funded. If you blow out, it's $50. If you do well, now you did well, and you're funded, and you don't have to risk your own money anyway. So no brainer, as far as I'm concerned. That's Apex. I don't know why I got onto that. All right, so I have the shorts working there. What I was saying something else before that. I can't remember now. Let's see some of your questions here. Madam Shizzle telling me Elgo got cross. Thank you. Let's see if she put the 0 in, by the way. There it is. Right on cue. Even though we bounced. Thank you, Madam Shizzle. I like to see that. I always give her the love sign. It's my girl right there. All right. So anyway, what am I doing now? Okay, so I got the short working here. I'm long. I got out of some here. Comes back. I'm gonna stop out of my rest of my long for basically a scratch, and then I'm gonna go short Izzy. Let's see what Algo guy's doing. I keep losing my Algo guy. Let's get this out of here. So let's see this. Oh, I needed to be. I forgot about crude. Hey, look at that. I made a mistake today. The number 7. Let's see. All right, I should be short. And hey, you guys. Whoa, this is a first. I can't believe the market went 2 ATRs and then back to the zone. So this one, right, if you took the 1, you lose it. Actually, the 2 lost too. Yeah, the 1 was here, the 2 lost, but the 3 worked, right? So the stats, this is what I'm trying to say. You don't know which ones are going to work per se. This one, you lose on the 1, you lose on the 2, the 3 works. Well, if you take all 3 of them at all times, then you actually made money on that trade. And here's the stats on those trades. So my room moderator here did the stats on these things. Why is that? I'm about to be short here, out of my long and NQ. There you go, you heard it. Where's it at? There it is. So if you take the 1 ATR only, you've got to be a 60% winner just to break even. I think, and we're going to know these with running at the trading firm eventually, I think it's at least a 70% trade, right? So if it's 10% higher, you make money over the long run, a lot of money, right? But this is you're risking 1.5 to make 1. Usually that's not a winning proposition in trading, right? This is a scalp trade. I'm willing to bet anything. That's why the trading firm's betting on me too, that this is a 70% trade, which will be a moneymaker. If you take the 2, all you got to be is a 42% trader. And that's a 1.38 to 1 trade flipped. So I'm risking 1 to make 1.38 versus risking 1.5 to make 1 on the 1 ATR. And then you get to the 3. This is almost a 2 to 1 trade. 1.95, risking 1 to make 1.95, and all you got to be is a 34% trader. right? So my point is, if you took the 1, the 2, and the 3 there, you basically broke even, made a little bit of money, right? You lost on the 1, you lost on the 2, and you made 2 to 1 on your money on the 3. So that's my point. I don't know which ones. Some days these work nonstop. We've already seen a few today. Some days the 2s. The way I like to trade them is wait for the 2 or the 3. So say the 2 and the 1 and the 2 get blown out, and it tags the 3. As it comes back, I like the backdoor 2, the backdoor 1. So that's how I like to trade them. Especially the best one is like if it hits the 2 and then take the 1 coming back. I don't like the aggressive ones as much because they're just very labor intensive. You got to be all over the chart, like waiting, get in, get out, waiting. I like the 2 and then catch the 1 coming back. So this one was a 3, backdoor 2, backdoor 1. Anyway, I need to be short here. This is the Hal trade. I should have already been short, heavy Al. 92, I could put on 11. Forgot that trading strategy. And I forgot to put my gold stops in. Stopped out of that too. Hold on, let me get out of these. All right, so I got out of my long NQ. Let me put this on first. I got to put on 11. And this is an ATR retest too, so I could put on Barks and Licks here too. You see Algo guy is still bearish. And this is technically a red rum, right? The volume event is in this guy from before. All right, so hey, here's another shocking development here. Oh, this is the prior one. All right. So guys, I'm short. Here's the prior event. I got to watch this very closely. This is 30 points in my favor already, pretty close. If it bounces, I'm getting out of 1. And there you go. I can't even get over to the damn screen. Holy crap, man. I swear on my life there's a camera in my office. Look at that. I couldn't even get over here to... All right, I'm getting out of 1 right here. Why? This is a predetermined area. This bounces, I got out of 1. This keeps going. Remember what's down here where it bounced the first time, where I failed to get out of my first short. Market profile composite low and lug. I'll be watching that. If this bounces from here, then at least I don't have a full position on, right? I probably get out of 2, but I'm bearish these markets, so I'm going to at least see if this can get down to the lug again. So I still have 3 on, is what I'm saying. I put on 4. Remember, I put on double size short because I think these markets are going to 0. All right, I'll get to your questions here in a second. Guys, if this recaptures this tail, adios. It's just a guess. Put in that buying tail, and we know these markets, usually it does that. If this comes back and overtakes this tail here, we already talked about the structure stuff, very likely coming down to this stuff today, right? Especially with the heavy relative volume in here playing. Just a guess. I will still, if I got a volume event right now in this zone, a new volume event, and it was long, I'll still take the long. But I will take shorts double size based on my thesis. That's all I'm doing with the thesis. I don't know what's going to happen next. That's not my specialty. My specialty is trading short-term day trading based off of these volume events. I can make predictions to the cows come home. So can anybody else. They're just guesses, right? It's not. Nobody knows what's going to happen. I do know how the markets react to these volume events. And that's it. That's all I'm doing. Simple. Trading is simple. Easy. Just kidding. All right, let's see if you guys got any other questions. Apex, great recommendation. Yes, guys. They've been having trouble with these trading platforms, but it's not their fault. It's been rhythmic for months now. Every other day it seems like it goes down. Last couple days, Trade-O-Vate's not working. I still can't put in. I got a live account on this other computer that I'm doing. That I do like reversion trades when I'm just sitting here and stuff. I can't put on COMEX or NYMEX trades for 4 days. So it's not them. It's these platforms. So, all right, I'm going to keep a close eye on this so I don't make the same mistake I made earlier and fail to get out down here, and it cost me about 70 points. So there we go. Down here. So anywhere in here, because this is the bottom of this market profile composite. As you can see, the other thing too is, yes, the big money came in, nothing's really happened yet, but this is the line in the sand. There are traders loaded up. We'll look at the footprint here too. The move out of here either way is very likely going to be a whopper. Why? Because this is fuel. Someone's going to be right, someone's going to be wrong. Someone's right, someone's wrong. Whoever's wrong needs to get the hell out of the trades. That's it. It's please make your trading that simple, because it really is that simple. Let's see what this looks like today. So today, we usually say 10,000 is a lot for NASDAQ on a reversal bar. This is the 10-tick reversal bar. Today, the relative volume, I mean the ATR is 41 right now. So this is what I try to explain to my room, because we were going to have a trade based on the footprint too, one of the trading strategies. When it is 41, you're not going to see a 10,000 bar, very unlikely, because the thing's all over the place, right? You can see here now it's barely hitting 3,000. So anyway, this is not indicative of what. Let's go back a little bit here and see what it looked like. All right, here we go. Yes. So like the biggest it's been, guys, is 4,000. It's just because the volatility is so crazy right now, which is good for us. I like volatile markets, especially when they're going my way. All right, we got something in the S. I gotta watch that area. Here we are. I'm giving this a chance to blow through here. Let's see what's going on in the S. I'm not making the same mistake twice, by the way. I'm going to be getting out of this trade if it starts to bounce. But see, this is where you can use tick strike. See this? They're hammering it. Why do I want to be a buyer if no one else wants to be a buyer? And right when I say that, I told you, camera in my office, someone comes in and sweeps it to the buy side. All right, hold on. Probably going to get out of these. Give it a chance. Is this a volume profile? Or there's nothing going on in Market Pulse yet. Let me see what spot gamma looks like. Getting hammered. That's Mag 7. S&P went from almost plus 3.5 billion to 724 million. So this is almost a 3 billion move. That's a lot. That's just fuel. These are just participants, options dealers that are unloading too, as well as everybody else. All right, I'm giving this a chance. Let's see if this can blow through the lug. See how I stayed in it this time? Because these things are going crazy. Why do I want to buy if no one else wants to buy? Meaning get out of the trade. So guys, did you seen what's happened based just on the volume events? I was short, then I was long, then I was short. It wasn't me just flipping back and forth, by the seat of my pants. I'm using these volume events and the rules around them to get in these trades. They tell me what to do. Right? I was short. I was long. I was short. Each one of these were winners. This one I screwed up on because I didn't get out, but all dictated by the most important thing in futures trading, these SI events, in my opinion. If you don't believe me, watch these for a month yourself, and you will come to the same conclusion. If you don't, then you just don't get it. That's the bottom line. That's the bottom line. Don't get me on that rant. All right, let's see what's going on here. All right, if this starts to pop back above here, I'm still going to get out of these, right? And one of her, if you watch the Pamela Love webinar I did, go to my YouTube channel. Here, I'll post that too. Let's see if I can find that. One of her favorite setups, this is before, the SI stuff. This is right when I started learning these. This is like 3 years ago now from her. It's a one-on-one webinar where I ask her the most basic stuff. One of hers is when the market doesn't get the conditions to build new lugs and it gets back above, the thing rips. So that's a great thing to know, especially if you get a bullish event, right? So this still has not given me new lugs. So that's what's happening right now. All right, so there you go. This guy got in, did a little blip out of here. What do you expect now? The other side of this. And then what do you expect after that? Zero. Straight to zero today. I'm calling it. All right, I still haven't put on my crude trade, which is fine. It's kind of bouncing around here. So I'll keep an eye on that. I just want to watch this NASDAQ so I don't miss my exit again. They're still hammering these Mag 7 stocks. Just one swipe to zero one time. One fat finger. All right, still short. Forgot ES. Hold on. Don't want to miss my buddy ES. So this is the market I made the millions of dollars in as a scalper. I pretty much can't stand it nowadays. All right, this is not confirmed as a bearish setup yet. Let's take a look at where we are here. It was not as bearish looking before. Yeah, bye-bye. CAS. Just a guess. I'll still take longs. If I get this turn long or bullish, I would take a long here, but this is in deep doo-doo. Deep doo-doo. You had all this. You had a fail break out of that. You had a gap through this. It tried to put up a fight, built new balance, and actually I missed a trade here. Well, no, because this is the first event. I take that back, but this was a failed balance breakout. I wouldn't take that down here entry, but guys, this looks like this. It wouldn't surprise me at all with the relative volume we saw if that happens today. All right, obviously I'll go guys bearish. So for me, there's nothing here aggressive to go short off of, meaning first move out of the zone. So I have to wait for a retest failure. Does it mean it's going to retest? Doesn't mean it's going to. It's very likely, right? Meaning this pattern. But sometimes this is why on certain strategies I get in first move out of here. This is not one of them, so I'm going to wait for that. If that doesn't happen, oh well, I'm not in the trade. I want to keep an eye on this NASDAQ before it gives me the finger, as usual. There's some buy sweeps. Are we at another area here? This is pretty damn close here, so I'm watching the bottom of this guy. Right around 17, 18. Well, I didn't have a lick trade on, but this is one of my areas. Struggle to get through resting liquidity. So if this starts to pop above here, I'm getting out of a couple. Right here. Where's that? Struggle to get through heavy resting liquidity. That is exactly what this is. And there you go. I'm getting out of a couple. I got 3 on. I'm getting out of 2 more. So now, of course, it just swipes right back down, but that's fine. I'm out of 2 more. I got 1 left. So if it keeps going, I still got something on. If it comes all the way back on me, then I've just got 1 on. So that was a great trade. And you guys saw me flip-flop 3 different ways today. There you go. That's a great trade. So again, to recap, we short this guy. That was a step bros. Screwed up, didn't get out where I should have, came back, that stopped me out, but that was a winning trade. If you guys are paying attention, you should have caught that. And then this was a bullish setup, got long that, got out of some there, trailed the rest of that, got out of that, flipped out of my long and into a short, pick short, caught there, I just got out of some here at this resting liquidity. So we'll just let that guy move around. So for me now, it should be new lugs, obviously. So now I have this last one remaining. Now this is where I try to catch the big winner. You know, on top of potentially putting a new short on, but off of this short, I'm letting this puppy ride to either next blue lug or an opposing volume event. That's it for that last one. I don't care if we hit this, if there was a something not the lug, but if there was like Izzy zone, I'm holding my last one, do or die, blue lug or opposing volume event. I try to do that every time. That's how you catch the runners, right? How I catch the runners. And there could be new shorts coming up too. There's going to be another. You're very likely going to see another stop run here any minute if this starts to move lower. So then I can put on new shorts off of that event. Oh, there you go. That's that. Did this qualify? Bookmap Bob just said something. Let's see what he told us. There you go. Yes, short validated. This is a short. I would not be taking reversion trades in this instance because doesn't mean it won't. It probably will. Look at this relative volume. This is when you get the mammoth moves. I do not want to be hoping the market comes back to a volume event algo-wise. That's what does that. The algos love to snap it back. This big money could just keep unloading on this market and you'll get your head ripped off taking reversion trades. So this is one of the disqualifiers for the reversion trade. You see heavy relative volume, and this is almost 4 times normal for this exact time period for the last hour. I would not be taking reversion trades. Doesn't mean it's not going to happen, but your odds are way worse. So that sucks for me because if this doesn't retest this zone, I can't go short ES. So based on my strategies right here and now, right? And they keep hammering this thing. So we actually did not reach spot gamma. Let's take a look at that real quick. So he called this move too. He said the other day, we can read it. We've been talking about it in my room. Look at this hero just getting smoked. Love it. I love when the markets sell off. Love when the longs get their asses handed to them. How many guys are trying to buy this bounce right now? This time around, the big money is like, yeah, no, sorry, we need to get out of our positions. This is not bouncing, right? So, I love it. Let me see something here in the. Just want to see if this thing's hitting. Yeah, see, starting to hit that one hit negative 1,000. That's the big money program selling. When you see the tick hitting negative 1,000, watch out. This hasn't really done much. I mean, it's moved from this is the ADD, this is the overall stocks, but the Mag 7's getting smoked, right? So that's what's driving this too. Come on. Spot Gamma. Let's see what he said today. And guys, you can get this too. This is in this document. It's on my website as well. All these, everything in the document is on here. Go over here. Use the code Scott. You get 2 weeks of everything of the Spot Gamma, including the hero that we've been looking at, really important information, and you get his commentary, which is equally as important because when he says he uses certain statements, he's right almost every time, literally. So this was yesterday. Let's see. Let's just look real quick. How do I go back? I think it was Tuesday. Started saying he's been saying it for a while, but let's look at the morning. He already called this based on moving at OPEX, which is tomorrow. He said the odds of this moving lower are dramatically increased right here. Major level right place for today. We look for them to start to weaken from Wednesday's VIX open to Friday's. Wow, how's that call? How's that good for for a call? How is that good for a call? It's not the right statement, but anyway, the weakening of these levels allow for the SP to shift out of this 5,600 to 5,665 range. Generally, we look for the range to hold until Friday, so it's right at the bottom of that, right? And then he says, there we go. Under 5,600, we are risk off and looking for at least a test of 5,550. We see 5,500 as a large long-term support. So he's talking about SPX. Let's see. There's a lot of grain stuff going on. I'm not going to go over that right now. I just want to see the difference here in the levels. Yeah, see, 5,600 was here. His exact words, that's what I was trying to find. He said if we break 5,650, it's a straight move to 5,600. And this actually went, I'm sorry, if we break 5,600, a straight move to 5,550. Here we are, zero gamma. There's your 5,550. So this could bounce here too. But the point is, he was calling for this, and when he talks about levels being broken and they break, and he says, watch out for quick moves, it happens almost every time. Anyway, let's see what he says today. And the guy, he's not predicting. He's going by what he sees. His thesis is based off of options activity. So it would behoove you to understand structure, right, and what markets usually do out of structure, just basic balance areas, so on and so forth, and then know what's going on with the options, and then you got yourself a real edge. Then you add the real-time volume events in. There's nothing more you need, in my opinion. All right, let's see what he says here real quick. I'm gonna get off here in 5 minutes off the webinar. Yesterday's AM VIX expiration appeared to release volatility as the SPX declined 1.4, NASDAQ 3%. This was the largest NDX decline since December of 22. That's interesting. ETF estimation -7, NVIDIA -6.6. As we stated many times over the past few weeks, the major indexes are driven by a few select names. No kidding. Case in point, yesterday's NVIDIA 6% drop. Meanwhile, the call frothy IWM, yeah, that's just Russell does its own thing. These concentration dynamics add an industry dynamic to forecasting SPX NDX levels. You can have a lot of gamma support resistance at the various levels, but if NVIDIA goes -7% again, that has a big drag on respective indexes. This makes watching those big three components. By the way, another we haven't got into market pulse. I don't think we're getting a chance today, but so look what I got going here on the other computer. So I have a market pulse that just reads what's going on in these. I actually have four. We'll look at it here. Let's bring this up real quick. Where are we at? Please tell me I started this today. Nope, I sure didn't. Damn it. I didn't have it running, guys. So I have the market pulse. You can have the actual volume. We've been talking about the volume, pressure, and balance. So you haven't seen a lot. Actually, there was one here. This is market pulse. It's like tick strike. They built market pulse for me. I requested it like 3 years ago, and they built it, and now it's just like it's just entity of its own. Like they've come up with all these different algos off of it, but this is showing me like these little blips here, the most selling in the last hour. If I turn off this these stop runs here, some of them were stops, but usually the stop runs are not going to cause it to be the most buying or selling in the last hour. So I turn that off. You can see here, if it turns black, the tip turns black. It was over the threshold, right? So just quickly, this is what I'm talking about. This is part of the MBO bundle where you get the SI information, but you can see here, like here's NASDAQ VPI, right? So it's all default. I don't change any of these except when you start it up, it's at 5 minutes. I move mine to hour, and I have it 70% threshold, meaning if this turns black, this is the most selling that has hit the market in the last hour. Very important. You can use this to help add to positions, get out of positions. You can see, so the sellers came in here. Some of it were stops, obviously. You can see the stops there too. And then it continued lower, right? This is a yes. So the point is, with that, I have running on my other computer that I forgot to start today for my 8th error of the day. It shows me the market pulse for those 4 stocks. There's Apple, Microsoft, Nvidia, and Amazon. And you would be amazed on how, when you see those spikes, how the market, obviously the futures are going to react to that, right? So it's something you really want to keep an eye on. I'm starting it up now. I don't know if we'll see an example, but market pulse is awesome. All right. I'm still short one guy. All right. I got to hop off here in a minute or two. You guys got questions? Last chance. How do you confirm, TRS said, how do you confirm that a zone is going to hold when getting retested? I don't. But I don't get in. So I don't say, I don't get in right there. I wait for that as just a better chance of this continuing lower. I used to get in there. Guys, everything I do has been from trial and error. You think I like waiting for an ATR to get in the trade if I want to go short? I used to get in right when I saw this. My original course would talk about getting in right when it breaks the zone, put your stop above. I've adapted. I've learned the hard way that's not the best time to go short. This is not the best time to go short. The best time to go short is when it does this, then that, right? And this did move down. We've already covered that. But I don't know it's gonna. How do you confirm that zone is going to hold? I don't know. But when the odds are, if it does this, then that again, it's gonna head lower, right? Just like that. That one didn't do the ATR, but you see what I'm saying. DK, should you exit your trade at the micro pullback? No, I don't exit my trade in any micro pullback unless you guys. Do you see the algos in here? I force based on what's going on. That's where my stops go. I don't let these algos take my money as best as I can. Right? There's still little jackasses that get you from time to time, but I do my best based on the way we trade these. It gets you out of algoville. I don't look at any kind of micro pullbacks. You're just feeding right into their hands. That's how they make money. Is when traders like you. I'm not making an example out of you. I'm not. It's not meant to be derogatory, but traders like you get out on pullbacks. That's what they know. Traders are going to get out on pullbacks, right? As soon as the big money relents, then they start playing games and they take everyone's money. That panics when this market moves against them a little bit. I made 1,800 instead of 5,000 because I didn't hold. There you go. I didn't read that, but there you go. If you follow the rules, you're still part. If you got short here, and this webinar is not for you to mirror my trades, it's to learn how to do these yourself. You're still in this trade partially. I got out of some. I still have some on. And you may not have got out in that area. These are my important areas I get out of. You may have said, I don't care about a prior event. I'm holding this thing. Great. Then you're still in the trade. SPX dancing about volatility trigger, tough play. I'm short butterfly from yesterday, but damn bigger direction. That's not what we do, but if that works for you, good work. Hey, Scott asked a question earlier. Yes, I answered that. Days like this come around once in a blue moon lately, but I think we're finally going to get, again, I think because the market's telling me, right? It's not, would it surprise me if we rip back to new highs? No. I mean, yeah, it would surprise me right now, but this, And this is how you know this is real with this relative volume. Like this isn't this mark. I'm not kidding you. It would not surprise to see a move all the way down here today, based on this all the relative volume we've seen. So I think there's a change in what's going on. We haven't seen any kind of. I mean, look at this thing's just gone straight up. There's never been any real major balance breakdowns or prior balance failures. You got a breakdown of that guy, and you got a failure of that guy. What do you think all these longs are feeling right now? Bigger picture. That's where you get the big money unloading. They're like, oh shit, we're wrong. Get me out. Pardon my language if there's kids watching. Hector, seems like you don't consider iceberg orders. Hector, that's all I trade. What do you mean I don't consider iceberg orders? That's what we're trading off of, stops and icebergs. What do you think was in this market today? This was a stop. This was an iceberg. This was an iceberg. I traded off both of these. This was a broken ice event. I went long. This was a broken ice event. I went short. That's all I do. Stops and icebergs. That's the core of my trading. So you might want to rewatch this webinar so you can get speed, or come in my room and learn what you're doing. I think it would help to anticipate pullback reversal. Wait, no, I don't anticipate anything. I follow my rules. I do my best not to anticipate. That's where traders get into trouble. I'm letting them tell me what is going on. I don't say, well, this is far enough. I think this is going to bounce. I wait for a volume event that's bullish. Then I get in. All right, guys, I'm past the time. I get yelled at if I go over. I do this this is exactly what I do every day in my trade room, twice a day, most days, as long as it's active in the afternoon. And again, I have my course. We haven't really gone over that. That's this, just quickly. This teaches you all about what I'm doing in here, right? You look at this puppy, everything that I'm doing, of course, log me out. Hold on. I'll just show you because it's a little more clear. You go to my YouTube channel, I go over it too. Hold on. That'd be such a piece of crap. Hold on. Actually, I could just show you here. Sorry. I didn't see this. No, that's not working either. It's garbage. Hold on. This just will clear it up for some of you guys that don't really understand what I'm saying with the... Alright, so there it is. Quickly. Whoops. Come on. So this is the course, right? About the add-ons and the settings and the thresholds for each product, meaning what's an important volume event to trade, adjusting the thresholds, subchart the settings, on-chart settings, sweeps indicator, drawing the zones, and this is progressive as we used to draw them pretty much incorrect, and it's gotten better and better and better. Yes, we have the zone drawer now, but you still need to know how to draw these when they don't, you're not getting the alerts, so on and so forth. And then here are all the setups. These are the setups we've traded today. I've traded a broken ice trade. I've traded a stop and hold trade. I think it was a Dumb and Dumber earlier. Step rows, right? So these are the 6 distinct setups that I look for in important areas. And then about the ATR, the advanced trading and zones, and then my pretty face after that. So there you go. That's the course. You can learn the stuff in my room, but I do not go over basics. I'm trading live. So if you want to hit the ground running, get the course. It's very low price from what I see from all these other educators out there. They charge $10,000 and crap for their courses that have never made money in the market, right? Learn that stuff. Then when you come to my room, you hit the ground running and you start trading instead of asking basic questions for 4 months, right? Because I'm trading live. I understand I talk fast. I understand I'm going over things fast, but these are live markets, right? That's the way it is. All right, guys. I'm out of breath. I will see you next Thursday. Thanks for